Hello and welcome to the Kape Technologies presentation. We have more or less 45 minutes, so I'll try to cover the presentation in about 30 minutes and leave you 15 minutes for questions to allow you to maximize the time as you wish. I see some familiar faces that already heard the story, so I'll try to cover the story and focus on areas that I think will give you the right knowledge in order to understand better our company, what we do, the business model, the journey so far, and the plans going forward. Kape is a cybersecurity technology business, floated on the AIM market since September 2014, with a great focus in the area of protection of digital privacy. We operate through our own user acquisition platform. All the user journey, the way we bring customer on board, the optimization of the conversion rates are all done through our own proprietary technology. We have category-leading products in each verticals we operate, in the endpoint security, in the digital privacy space, in the operating system performance recovery. Since we started, we have a strong track record of revenue growth and EBITDA growth. And one of the things that we've done in the last 3 years, we improved the quality of earnings materially. In 2019, more than 70% of our revenue coming from software as a service, from subscription with very good retention rates. We serve this number as of June, but obviously we had the same strong trend continue to the second half. By June, we served 1.2 million customers. We are R&D driven business. We have 2 main R&D centers. One is in Tel Aviv with 40 engineers, and in Romania, Bucharest, with about 80 engineers. 44% of our workforce are engineers. In the first half of the year, our revenue were $29.9 million. Last year, on a full year basis, in 2018, we made $52 million. We project this year to drive high double-digit growth on the top line as well on the EBITDA level. We grown the EBITDA significantly since the first half of 2016, that the EBITDA was $600,000 to $5.8 million in the first half of 2019. Strong retention rate of around 82%, and we are about 300 people in 8 locations around the world. We look on the business, and the way we like to operate and the type of business we are growing is a typical SaaS business, software as a service, which is a combination of growing the user base and driving high renewal, high retention rates. In the first half of the year, the subscription retention rate went up to 82%. We see on every period we were able to improve the retention rate, which is a combination of few things that we've done in the business. Now we are in a very good level, significantly above the benchmark in the market. The user base are growing very fast. In the first half of the year, the subscription user base, people that buying subscription on a SaaS basis, one of our software solutions, crossed the 1 million subscribers, up 24% from December. And we see very strong growth in our mobile user base as well, desktop. We acquired 3 acquisitions. We completed 3 acquisitions in the last 3 years. CyberGhost was the first one. Then we bought ZenMate and Intego last year. I'll explain you each one, what are the product offering, with that all of them are now fully integrated, and we see very strong growth in the monthly recurring revenue. And we have experienced a very strong success in the cybersecurity research capabilities. We identify high-profile security threats on the Mac OS platform in the first half that gave us a very strong coverage in leading tech magazine in the first half. All the financial metrics are going in the right direction. Revenue increased 24% in the first half. Increase of the segment result, which is the comparable to gross profit, went up 28% to $14.7 million. Adjusted EBITDA went up to $5.8 million, and overall we are in a positive cash position. At the end of June, we had $36.4 million of cash available for future investment. What we've done, when we started, we were one of the leading user acquisition partners to the large American cybersecurity group. So we help companies like Symantec, Norton, McAfee to drive demand to their software solution in the internet security space. In the second half of 2016, we started to identify a big shift in the internet security market. One, it was after the election in the US and the greater importance about digital privacy. The criticism on Facebook and Google about the use of digital information. Obviously in Europe, the beginning of the GDPR regulation, and we identified that there will be a change from the typical freemium model that the large internet groups were building on, including the large antiviruses that essentially giving the product for free and looking to alternative monetization solution, which is essentially either to sell the data of the user or to show him advertisements. And we said we would like to take our capabilities and help people as well as SMEs around the world to have better protection and security in their digital life. On top of that, one of the things that we wanted to create, we wanted to improve our quality of earnings. We wanted to move up in the value chain and not just to help the large cybersecurity groups to build up their own user base. We wanted to build up our own suite of software solutions and gradually build up a user base that will continue buy subscription to at least one of our software solutions and drive high retention rates. We started in June 16 with 0 subscribers on our user base. Last June, we crossed the 1 million subscribers. And so far, the results were better than what we expected. One of the things that changed as we started to work and focus on the digital privacy first market is that if in the past, most of the cyber crimes were targeting large organizations, so hackers wanted to hack American banks, credit card company, and it was less targeting consumer and SMEs data. This changed significantly in the last 3 years. We see almost every week high-profile attack on, if it's BA in the UK, that they didn't target the data of BA. They wanted to have access to the list of customers. There is a lot of value of having access to our own personal information, if it's where we live, our credit card company numbers, email addresses. And what we essentially wanted to give to consumers around the world, the ability to be proactive and use technology in order to limit the ability of third-party organizations to monitor, track, and collect their information. The awareness is growing very fast. A few years ago, not many people use the digital privacy software solution. We see that it's going up every month. The market is growing significantly since we started. It's always nicer to work in a growing market, and it's working very well for us. But obviously, we challenge ourselves and we want to grow much faster than the market. And so far, it's going well. The way we look on our product suite is a combination of 3 verticals. The first one is the digital privacy, where we operate through 2 brands. One is CyberGhost, and the second one is ZenMate. In the endpoint security or malware protection space, we started based on an acquisition we made in July 2018 when we bought Intego, one of the leading cybersecurity firms mainly for Mac OS environments. On top of that, we invested a lot of R&D effort to scale up the offering, to expand it to the Windows environment as well. And for infected devices, we operated 3 products in the operating system performance recovery. The main one is Restore or the driver fix. This is more our mature business unit. And obviously, there are a lot of cross links between the products. One of the things that we just started is to drive cost promotion in order to increase the average revenue per user. And there's still a significant room to grow in that area as well. We look on everything we do as we are tech-driven that is very close to our users. We want to help people to maximize the use of the software. All of our software solutions are cross-device, and you can move very seamlessly between desktop and mobile. In the first half this year, we had a very strong success in our mobile activity. We started with CyberGhost, one of our virtual private network application solutions. We scale up very quickly on the iOS devices, and since then we are continuously ranked as one of the top 15 utility apps globally on the iOS, next to Gmail, Google Docs, and much larger applications than we are. All of the steps that we've done led to continuous growth in the subscription base. We started with, this is pre-acquisition of CyberGhost, with around 150,000. In June, we crossed the 1 million subscribers, very good retention rates, and a very healthy mix of the subscription. 91% of our subscribers buying longer-term packages, which is 1 year, 18 months, 24 months, 3 years packages, and only 9% buying the short-term packages, which is essentially it's either monthly or 6-month subscription, that usually much more expensive than the longer-term packages, and usually there are entry points to move to the longer-term subscription. Financial performance, we grown the revenue from $24.1 million first half of 2018 to $29.9 million in the first half this year. We are a global business. We don't have any dependency on any specific country or any specific currency. Our biggest market is the US, which is much more advanced in terms of the awareness to have better digital privacy and digital protection. And then our focus is mainly on tier 1 countries, like Western European countries, mainly because we would like to drive high quality of revenues, to have very strong visibility of our revenues going forward. And we see that the quality of the users in those markets are in the level that help us to achieve those targets. Cash flow, as I mentioned, more than 70% of our revenues this year will be on a recurring basis. It will grow to more than 90% next year, and gradually will become a 100% SaaS business. We have a very small part of service revenues that obviously are not being sold on subscription, so this is the only part that will not change to recurring revenue. And now we are growing very fast on our user base. What we see, and this is 2 important metrics to understand, is that the unit economics, the way we look on how we grow the business, is that from one side we have a customer. It could be a small or medium-sized organization in the US or elsewhere, or a consumer that is buying a subscription. In our models and in reality, the way our user base behave, customers stay with us around 5 or 6 years. So on the initial purchase or the initial subscription, we'll see at least 1 or 2, or if you bought the annual package, 5 renewals that will make us, for every customer that joins us, let's say we sell a subscription for $100 a year, we will generate from this customer $600 across the lifetime of this user in our user base. From the other side, we have a very advanced digital marketing platform. We do all of our sales and marketing activity online. We don't do any customization of our product solution, and it's very scalable business model. And we use it to do user acquisition. So we pay money in order to acquire users that we estimate will buy and will drive high retention rates. So on average, on every dollar that we spent on digital marketing, we will make $3.1 back across the lifetime of the user. And it's very conservative assumption. What's happened in reality, and I'll give you example from the 3 products that we sell only on subscription basis, which is CyberGhost, ZenMate, and Intego. We bought the first acquisition, CyberGhost, in March 2017. You will see that the way to look on this chart is that every color represents a year of purchase. So the black blocks shows customers that bought at least one of our solutions before 2015, then the purple in 2015, the red in 2017, and so on and so forth. We bought CyberGhost around March 2017. We started to lift up and scale up on user acquisition activity in the second half of 2017. And what we've seen that if before we started to deploy the product onto the Kape user acquisition platform, the businesses were growing nicely but linear. Since we started to execute on user acquisition and push harder on user acquisition, we saw that the number of users that buying one of our software solutions scale up significantly, exponentially, whilst we're able to improve on every period the retention of what it's led to a very strong quality of earnings. And in a very simple way, what we do is now we are focused mainly on growing our user base and our top line. We see that the lifetime value of the user in a very good level, and we see that the customer acquisition cost, how much it costs us to acquire a customer, it's very in an attractive position. So on every customer that we're acquiring, we are generating very good returns across the lifetime of the user, and this is what drives the growth in our user base overall. On the contrary, if we wanted to be super conservative and stop investing into user acquisition, only from the existing user base, from all the cohorts that bought at least one of our software products today or before, we will generate across the next 2 years, assuming there will not be any further renewals afterwards, $45 million of cash inflows. In summary, and this is a slide that we started to share with the market 2 years ago, we see continuous growth in the deferred income balance that will continue to grow because we sell the subscription, we call it the money up front. Adjusted operating cash flow before the reinvestment into user acquisition in the first half only grown to $7.3 million. Retention rates are in a very good level. Paying users are growing fast, and what is more interesting is that the subscription base is growing significantly from 830,000 in December to over 1 million in June 2019. And as I mentioned, we see the trend continued very strongly into the second half. 2 acquisitions that we made last year. One is ZenMate, and it's a good example to understand the way we look on M&A because we are still in acquisitive mode. All the numbers that you have in the forecast that in the progressive research note, by the way, only assuming organic activity. On top of that, we want to deploy the cash that we have on the balance sheet. And 2 acquisitions that we made last year. One is ZenMate, which is a consolidation play. We bought one of our competitors in Germany in order to drive cost synergies and to expand our user base. Intego, it's an endpoint security business we bought last year, American business. The rationale there was in two reasons. One, we wanted to expand our product offering as part of the development of our digital privacy solutions into the security and protection space. And secondly, it was a case like we've done with CyberGhost in the past of a company that developed a very scalable and strong tech solution, but couldn't scale up significantly in the go-to-market strategy. And we identified that by deploying the Intego product to the Kape user acquisition platform, we will be able to lift up the monthly recurring revenue very quickly. And it's happened better than what we expected. Our strategy is a combination of three things. One, we would like to accelerate the growth in a SaaS revenue base. It gives us a very high visibility of the revenues going forward, driving very good quality of earnings. Secondly, we will continue to leverage on our user acquisition platform. We like the fact that we are not dependent on any third-party tech provider, not like a lot of our competitors, and it's one of the differentiators of Kape that we don't lose margin to third-party tech providers. And lastly, we will continue to invest in R&D as well as looking on acquisition. One of the things the areas that we are looking on at the moment is to drive consolidation. We see that there are some competitors in the US or markets that we have strong position in, that by combining us with one of our competitors can drive a lot of cost synergies and enhance the growth further. This is one area. Secondly, we would like to expand the product offering as well. The digital privacy market is a relatively young market that was growing and still growing very fast. The expansion in the internet, of the coverage of free Wi-Fi networks. So even today, every one of us connect to a free Wi-Fi network of the hotel. The reason that the Wi-Fi is free because they are using alternative monetization solution, mainly for user profiling, for marketing purposes, to make money. Secondly, the exponential growth of the Internet of Things, amount of devices that will be connected to the internet, all will increase the importance and the need for consumers and organizations around the world to have a more secure and private internet connection. And we would like to be one of the global leaders in the space by expanding our product offering further. Overall, before moving to the Q&A part, we are a fast-growing digital privacy-first business. We did a significant change in the strategy 3 years ago, and it's going very well for us. The revenue and EBITDA are growing fast. The user base is growing fast. We are very confident in the performance of the business in the next couple of years. I think we're just at the beginning of the growth cycle. 2019 was the year that we made a big jump from the $52 million last year to the high 60s, close to $70 million projected revenues for this year. And what I'm very pleased of that we improved significantly the visibility of revenues and the quality of earnings. Gives me as a CEO, as well as the rest of the management team, very strong confidence about the performance and our ability to drive continued growth with the business organically, as well as enhancing it further by deploying the cash that we have on earning-enhancing acquisitions.
Just new to the business, just seeing the revenue fell from 2016 to 2017, was up a bit in 2018, but organic growth expected to take off the next 2 years. Could you explain, please, why the revenue fell from 2016 to 2017 and didn't see much growth in 2018, and why suddenly things are back on track with strong growth?
Yeah, good question. So the business, when we started, before my time, the business were a user acquisition partner of the leading cybersecurity groups and did very well. However, it was very low recurring revenue base. So essentially on every customer we help, let's say McAfee, to get, they paid us one-off commission. In the first half of 2016, the board decided to change strategy and use the user acquisition technology of Kape to promote our own software solution and to go up in the value chain. So in between 2015-16, we made a big shift in strategy. In 2017, we sold part of the legacy business, and this is what confused or creates some fluctuation in the historical numbers. And in 2018 and 19, the business, we focus only on our core activity, which is promoting our own software solution, growing our user base, and drive good retention rates.
Can I just ask, with regards to the different markets that you're in, how your products differ and have a better positioning than some of your much larger competitors?
So I'll start from then. So at the moment, the large companies in this space are the traditional antivirus groups. Now, all of them, it doesn't matter if it's Avast, AVG, Norton, McAfee, will build their business model based on the freemium. So essentially, they brought the customer to take the free basic antivirus and then hope that it will be converted to the paid version. What happened in reality that only the minority of the free users convert to the paid version. So they're all being forced to look for an alternative monetization way, which essentially was to harvest the data of the free user base, sell it mainly for marketing purposes or distributed advertisements. When the world changed and the awareness of their own digital privacy grew, if it's the GDPR here, or following the election in the US and the criticism around Facebook and Google, people wanted to be more proactive and gain back the control on the information they share online. Another thing that happened, completely different area, is the rise of companies like Netflix and Spotify that educated people around the world that it's better to buy a subscription, get good quality of products, and not compromise your data. So companies like Kape or some of our independent competitors are in a very good position to disrupt the dominancy of the large antivirus groups that are all dependent on the more traditional freemium model that becoming less and less relevant, and people are less keen to compromise their data. And this is why we were able to grow and gain significant market share from the large antivirus groups, and there's no reason why this trend will not continue. And Avast, that IPO'd in London last year, mentioned in their prospectus CyberGhost, one of our brands, as one of their key competitors. Back then, CyberGhost made in a year revenues that Avast made in a month. So it was the first signal that the balance of power is changing.
How much cash have you got for acquisitions?
As of end of June, $36.4 million.
Okay, I read that, but you're capitalizing your expenditure on new customer acquisition, so you're showing a profit, but cash flow is a lot less. So, but looking forward over the next few years, how much have you got available? Because if you're expanding a lot, you're going to be using a lot of cash.
So first of all, we keep the balance. It's always, and we as a management, we are very confident in the growth. So as long as the lifetime value will be significantly higher than the cost to acquire a customer, we will utilize the opportunity in the market. However, we take a balanced approach, and this year it was mainly to reinvest the operational cash flow back into the business. In 2019, I think this is the way that the Progressive modeled it in their forecast, or some of our other brokers, will get to a tipping point that the cash inflow from the existing user base will surplus the required investment into user acquisition. So next year we'll start to see it change and scale up very quickly. And it's the typical scale up of a SaaS business. Now we understand that the opportunity in the market is significant. We want to maximize it, and we see that the metrics are in a very good position.
All right, final question. Great to hear retention is improving, but even at 82%, you're going to lose all your customers over 5-6 years. What's the maximum retention rate do you think you could get to?
It's a good question. So if you'll look on the SaaS enterprise market, the retention rates are significantly higher than 90%, but the sales cycle is much slower. So it takes much longer to bring a customer on board, but once you're there, they tend not to leave. In the consumer, SME is a much more fast-growing market. So because we are now growing very fast on our user base, the way the model works, not just for Kape, for all the companies in the space, that most of the churn is happening on the first renewal. So let's say a user bought an annual package, around 40% will churn in the first renewal. After that, the retention rate goes up to 90% plus. To me, it's always nice to see that the retention rates are improving, and we are investing a lot of time and effort in order to do it. We brought the customer support function in-house. we change the user journey in order to maximize the use of the software for each one of our users. But if we'll get to a state that I'll see that the retention rates will go up to 90%, which is great from first sight, it's not necessarily all positive, because it means that we're growing less or slower on the new signups. But so far, we are very pleased with the current level. If you'll see the benchmark, most of our competitors are in between 60 to 70% renewal rates. We're in a very good level.
With the growth story in a growing market, I know a lot of retail shareholders complain about your prices, but it would seem the market either doesn't believe your story or doesn't trust the company. Any comments on that?
First of all, I will be the first one that will be disappointed for the existing share price, because there is a mismatch between what we do and the performance of the company and the price. I hope it's temporarily. Our price went up very quickly since when we made this change of strategy. I don't think that it's a case of a loss of trust. I think that we get a very strong support from the funds and retail investors that hold us. And I hope part of the reason, I think that because we are in a stage that we invest significantly to user acquisition, I think a lot of people want to see that the cash inflows we'll generate from the existing user base will start to surplus the investment in user acquisition. And we are very certain it will happen very shortly. Plus the macro environment, so small caps traded on AIM technology suffered from a more difficult market condition, but I don't think it's something specific to Kape.
Oh, hi. You make draw our attention to the first half of 2019. The Intego development team find out the first important malware the problems. It seems quite impressive. Can you say what's the benefit and then describe absolutely. A bit more?
And Intego, as I mentioned, is the acquisition we made last year. The rationale was we wanted to expand significantly our IP and knowledge in the malware detection space. In that case, it was not the case of consolidation and drive cost synergies, the other way around. We more than doubled the cybersecurity research team following the acquisition of Intego. And in the first half, it was the first signs that we expanded the profile. We were able to be the first one in the world to identify a few high-profile threats on the macOS Apple operating system that gives us a very strong coverage in leading tech magazines, and we will continue. We are R&D-driven business. We close to 45% of our workforce are engineers, and we like the fact that we have a very strong technology and our own ability to scale it up and distribute the products in order to expand the user base.
Do you get any financial award apart from probably reputation?
Yes, but this is obviously, it's nice to have. It's not, what we do a lot is that we bring a lot of hackers to our offices to try to challenge us and penetrate to our own systems and give them awards. And it's part of the things that we do in order to make sure that as a cybersecurity business, our platform and system are fully secured.
Thank you.
Ladies and gentlemen, if we could just put our hands together to say thank you to Ido for a great presentation.